Today is Thursday, August 18th, National Fajita Day. We're after the close today. Sorry for the late video. I want to take a look at commodities because I've been writing about it this week. And this is the closest that I've found to the CRB index, the old one. The continuous commodity. This is an ETF based on that. Weekly chart going way back. And you can see, obviously, pretty bad bear market over the last couple of years. This is the 200-day or the 40-week average on this weekly chart. And you can see in the bottom, relative to the S&P 500, it's not doing much at all. It's pretty bad. Maybe you could argue it's flat now. So the ratio of commodities to stocks or financials, it's still in the favor of financials. But that's not the whole story. So you can see that this ETF is above its 200-day or 40-week average. Let's check this out here. Let's change this to momentum, to RSI. And we can put a line here. And it's not great, it's not perfect, but this is a bullish divergence with weekly momentum over the last 2 years. So that's a positive. Let's dig a little deeper. Let's look at oil. Oil was a story today. You could see that bullish divergence in RSI again, but that is an inverted head and shoulders pattern potential. I say potential because it's really not the pattern until it actually breaks out. Resistance at around 50. So a move above 50 would be pretty bullish. Right now you can see breakout and pullback to the 40-week average. So it's another bullish leaning sign. Okay, let's check out the grains. Grains have really been stinking up for the last couple of years. This is soybeans. Big bounce this year, but look where it bounced off. It's a pretty good support level. And here's the 200-day, the 40-week average, the breakout and test. So far, so good. So maybe there's hope for grains. Check out corn. Corn is just cheap. Look at that. But it's sitting at a pretty important support level right now. You can argue that this is a potential bullish reversal pattern happening here. Let's zoom in a little bit. It's not perfect, but you can see a sort of a weekly morning star type of candle. Of course, we have one more day to go, and the down move here was not really textbook. But it does look like a reversal. Maybe that's a hammer candle in candlestick charts. So it's a possibility of reversal here, but you do have pretty strong support right at these levels. Let's get that chart back to where it was. Let's look at wheat. These are the old symbols. I'm not using the new one because it really doesn't matter with this long-term analysis. Again, there's the long-term support here. Wheat is still below that, but this looks like it may be a false breakdown. I don't know that yet. It's just a guess at this point. Trend is still down, but move back above this level. That would be pretty good and go a long way towards reversing this thing. All right, on to the precious metals. And I'm bullish on gold. I think the bull market has started already. Here's support at, well, a little bit over $1,000 an ounce, but in this general area, looks like this was a support level and a bottom. There's the average. Momentum is pretty decent in the weekly time frame. Now you do have a resistance level right around here. So just watch out for that. Breakout through that level, I think, would be pretty good. Silver, not to be outdone. Here's that similar resistance level we were just talking about for gold, and there's that support just where silver was starting to take off in 2010, and the lows over here. So I think this is pretty good. Momentum is good, above the average. It's pretty good. Finally, industrial metals. I also like this group, just not copper. You see, copper is just still in a downtrend. It's in a triangle, which you could argue was a bearish continuation. I don't think it is, but until it breaks out one way or the other, you really got to sit tight here. But I do think the other industrial metals look a lot better than this one. So there you have it. While the commodities index, the whole thing, is still lagging financials, in other words, market's still favoring financials over commodities, there are reasons to think that that might be changing. You got oil looks pretty good. Grains may have bottomed. The precious metals looking good. And the industrial metals, except for maybe copper, are, I think, on the verge of doing better. So that's it. I think commodities will probably be a good place to watch and that would also translate into commodities related stocks.